Hey there, everybody. Lamont from Chart Guys here. Just wanted to start providing some coverage for the clean energy sector as it continues to be strong and offer a lot of trading opportunity. So obviously right now it's been on a tear, on a very strong bull move, and so for swing traders there's probably not so much opportunity yet until we see some daily consolidation. However, if we want to position for those potential plays, then we need to monitor them all the time, right? So, going to begin some daily coverage of the clean energy sectors, including solar and wind, and maybe electric vehicles. We'll see how that goes for now. And let's just start it off with the ETF TAN. You can tell. Let's start, since this is the first video, I will start with the really macro analysis. And I picked these tickers that are on the thumbnail because, well, Jason from Chart Guys made me narrow down the list that you see over here on the right, and now I see potentially that I probably should have included JKS, but I will get there soon. Okay, so let's see here. If we look on the macro time frame, the monthly chart for TAN, you can see that we are now in this previous area of congestion. Let me just clean this chart. We're in these previous levels of congestion. There was a little bit of market agreement here before this big dump down, and we established this base. So, excuse me. Right now, the bulls are struggling to get over this previous level of support, now acting as resistance over here. If we can get a monthly close over it, that would be a very good look for bulls. But even when monthly consolidation begins, we will just be looking for a very healthy monthly higher low. There is really no sign of that happening yet. In order for us to start scouting that monthly higher low, which should make for a very good swing trade, we need to see the weekly trend change first, which there's just no sign of that. The ETF set a really quick, fast higher low here at 47.98 and then has just broken to new highs since then with still no signs of slowing down. So even the next weekly higher low, and I don't really consider this move right here enough of a pivot to be a higher low, so I would just see this as one move up. As soon as weekly consolidation begins, we'll be looking for a weekly higher low, so swing traders can jump on that opportunity. Additionally, the daily trend is still also very strong after setting this higher low over here. This higher low is good at 54.23. So whenever we see daily consolidation, swing traders can even be looking for that daily higher low. Just being mindful, of course, that the longer term charts may need some consolidation soon. So that being said, let's take a look. So we had another huge volume day today. Wow. Typically, when you have three gap ups like that, you anticipated a reversal. It's actually a reversal signal, three gap ups. However, it needs confirmation on that fourth day, on that fourth gap up to see a bearish reversal candle, which just didn't happen. We just had a very quick pause, and now the bulls are back at it. So looking on the hourly time frame, we are just now flirting with overbought conditions, and while there is RSI divergence shaping up, and that just means that RSI is making lower highs while price is making higher highs, while that is the case, we do have the potential to break it, and it looks like maybe we're right on testing it. Yes. So currently, for this divergence to be negated, we just want to see this trend line break. Line break right here. Price is just coming up on it, so we want to be a little bit mindful here for the potential of some hourly consolidation. Even when hourly consolidation is to begin, whenever it does begin, we will be looking for an hourly higher low compared to this after hours low here at 65.50. Though, because there's not that much volume traded after hours, I kind of care more about this base over here first at 66.41. Okay, let's see here. Now, that being said, because the daily chart is so extended from this last area, this last basing area, this little consolidation period, I would not be surprised if we saw some consolidation to test these levels here, and that could potentially make for a weekly higher low. Let's just draft it up right now. Let's say we get interested in looking for a position here on the weekly chart. That could be a good area, an interesting area for a potential weekly higher low as well. Let's see here. Yep, so we're just going to be looking for that healthy weekly higher low going into this week, and at the back of our minds, we'll just be very mindful of the potential of some longer term consolidation. Into the tickers now, individual tickers, and I rank them based on how far away they are from their previous from their previous high. And so now I've realized that actually JKS should be the first one and not ENPH, just because JKS is very, very far away. So basically there are three kinds of tickers right now. There are three kinds of macro charts for these solar names. There are the all-time high bulls, all-time, oh, that's why I had ENPH wrong. Okay, I see that. Never mind, ENPH is the best one because you can see it's blown by this previous price action here, whereas JKS, yes, it's far away from this initial top, but there's been a whole bunch of chop beforehand, so that's why I picked the. So ENPH is the strongest of the all-time high names. BEP is very similar. SEDG is very similar. CSIQ is a part of the second class where it is names that are kind of choppy. So you'd be covering JKS instead of CSIQ. That's what it is. And then you have ORA. No, I'm sorry. And then you have ORA, which is a bit different because it has broken out from its all-time high and then come back to test these previous tops. So again, you have these all-time high runners and then names that have just been in these kind of big, long, choppy patterns for their entire existence. Okay, and FSLR looks pretty much like. I will cover the tickers as they are, if they have individual setups that are more favorable. Otherwise, I'll likely just stick with the tickers that are on thumbnail. So starting with ENPH, as we know, it's been on a huge tear, massive tear. It's almost like the expected move, the anticipated move for the year, the most extended anticipated move of the year. This is the R5 level, just based on pivots. Weekly time frame, whenever we pull back, we will be looking for that weekly higher low. Daily time frame is exactly the same thing. Incredibly strong charts. But again, whenever you have price leave a base area and it just blows by a previous resistance, very, very often those levels will get back tested. And that's actually what you see very often in a healthy market when you see that stair step like pattern. So for example, this high or over here, this high gets, let's say this highest close over, highest close, I guess, here. That highest close gets back tested right here before price leaves. And if you look at this high over here, for example, it gets back tested over here before price marks it up. And so it's just a very common price action development. And the old adage goes, the harder, the larger they go, I guess. The larger they are, the harder they fall. So the larger this move, the harder the falls typically are. Now, right now, again, there are still no signs of daily consolidation yet. In order for us to see that, we need to see the hourly trend go to the bears, and there's just no sign of that either. So we're just making very, very healthy hourly higher lows as well. Though I will say that the daily chart is likely not sustainable, this kind of growth. Typically, we want to see healthy pullbacks and then advancement. So even here, you can kind of see the backtest of those levels. So for example, this previous high gets tested back here, doesn't quite get there at all. This one gets tested, doesn't get back there at all, gets back tested, right? So a very healthy trend will just have this stair step up pattern. So I guess, let's see, can we maybe potentially look for a trend line here? Oops. Yeah, we can maybe use this trend line to help us, but really what I'm most interested in is just this moving average here. 12 and 26 EMA, as long as it's acting as support, then the bulls are still very, very healthy, looking for hourly higher lows. Yeah, that's pretty much it. And so for the next hourly higher low, ideally we'll see that in 5-minute oversold conditions. And so for ENPH, that's the last hourly higher low. If we were to see consolidation from right there from tomorrow, 5-minute would be oversold right around where that previous top is. So you see these levels, this is just these squiggly lines printed on my chart right now. It's just a representation of RSI, right? So if price were to come down here now, it would be reaching 30 RSI. And so for a name like ENPH, you can see that it would be oversold right where that previous top is. So a zone of interest potentially would be something like that. And then we would stop out maybe somewhere a bit under there, right under that previous hourly low, because if that low were to be lost, then the hourly trend is compromised, then maybe we don't want to play so bullish anymore. Let's see the next ticker. So now these are all very similar names. I'm now realizing that JKS should be the feature instead of CSIQ. And again, the reason why I've categorized them as such is just their choppy nature before. So these names, JKS, CSIQ, ORA, FSLR, are very different from ENPH, BEP, SEDG, who are all just blue sky bulls, big aggressive bulls that are running. So JKS, out of all the choppy names, is it is stronger than CSIQ. You see CSIQ over here is still struggling to get over these tops, so I think I'm going to start covering JKS. Sorry, Jason, for making this thumbnail. And you can see the monthly time frame again. Whenever we pull back, we will just be looking for a monthly high or low. On the weekly time frame, same exact thing. On the daily time frame, same exact thing. Incredibly strong move. And let's see what kind of clues we can dig out in the hourly. This looks like algorithmic buying. There's just no opportunity, or much opportunity at least, for bears to take any profit on any of this consolidation. That all the dips are just getting bought up right away. Very, very strong. When the momentum shifts, it should be very, very clear. So if, for example, right now, if you look at this hourly chart, none of these red candles are very meaningful at all. You don't get any Maribozus, you don't get any really big red candles, and even when you get a few red candles in succession, they only wipe away maybe two green candles prior. So right now, bulls are still very, very strong. We'll see a huge character shift. So we can be patient. Bears can be very, very patient. There are a lot of people who are trying to time the top, and there's really just no need for that, right? When the weakness presents itself is when we should start looking to position for shorts. And so what we want to see is 3 or 4 red candles that are far more meaningful to this. 3 or 4 red candles that just wipe out maybe 1 or 2 higher low supports. So for example, you have a higher low support here, little one over there, and you have another one right here, right? So let's say we can get 2 candles that just take out, or 2 or 3 candles that just take out both of these supports. At that point in time, then we can be top fishing using the previous high as a potential stop loss, looking for that potential hourly trend change, which would signal daily consolidation, and have bulls looking for that daily higher low. CSIQ, I don't think I'm going to cover anymore. Let's see. CSIQ, I don't think so. I don't want to cover these names just because there's more resistance here. I'm more interested in the names that don't have much overhead resistance, so you can just pretend that CSIQ is actually JKS. ORA is a little interesting because, like I said, although it has this previous chop zone and it is under tops, it has just pulled back to this previous level. So while CSIQ is still struggling to get over these tops, ORA has gotten over these previous tops and is now back testing this major one as support. And I've highlighted this volatility box here because this chop zone is very important. If price can stay above above this green rectangle, then we will not enter this lower range. You see, when price popped up above and it broke right through that previous top, what did it do? It came back tested this area, put in a bunch of volume, and then left the base again. And now what price is doing is it's come back to back test this base to make sure that it is actually good, solid, strong support before the potential for markup. So out of all these names, actually, I think ORA potentially is going to offer opportunity the soonest. Now you can see that they had this monthly trend change here with a monthly. There's the high. Whoop, I missed it. There's the monthly high, there's a monthly higher low compared to these lows over here. There's a monthly lower high, and then it broke to a lower low, straight into a bounce. Typically, it's a good look for the bulls when that occurs. So zooming into the weekly time frame, we can see that the bulls are now making quite a bit of space. This is a good enough range that once we pull back for a weekly higher low, once we start weekly consolidation, we would anticipate a weekly higher low, especially if this week can close strong. If we can close near these tops, maybe even break these tops and test the pivot, bulls will be very, very confident in the potential of a weekly higher low. Now, for that to be the case, weekly consolidation, we need to see a daily trend change, which again, there is just no sign of right now. When the bulls begin consolidating on the daily time frame, there will for sure be a lot of interested bulls on the sideline waiting to potentially grab a daily higher low. And for us to start seeing daily consolidation, again, we need to see that hourly trend change, which right now there's just no sign of that. In fact, the hourly time frame has just broken this TD support. Well, without extended hours on, it's just broken this TD resistance. I should say. Typically, it's a very good sign that the bulls are strong. One of my favorite setups now is to look for a higher low. Look for a higher low using the 12 and 26 EMA. So if we were to see a 5-minute trend change to the bears, which could potentially happen because right now we're kind of in this little wedge pattern potentially. Right, we're getting these higher highs with very little follow through, so we have the potential to be wedging here, like that. Maybe even a bigger one, like that seems to be pretty good. I want to make sure I get all these closes, and I think there's a close over here. All right, So yeah, potentially looking at a wedge-like pattern, and we don't want to just trade the wedge blindly. Even though we have this wedge development, we want to just be mindful that the potential for weakness is there, right? So ideally what we'll see is a breakdown of this wedge line support that is meaningful enough, again, to make a lower high play, right? So if we can see a breakdown of this wedge, nice move down to take out some hourly supports. When we move up, we'll be looking for that lower high to potentially short. All right, and now getting into FAN, which is the wind ETF. There are some individual tickers there, and you guys let me know if you'd like to see more of the tickers or whatnot. Then we'll just have to bother Jason to make me a bigger thumbnail, and I'm happy to do it within reason, I suppose. So the FAN ETF on the macro scale, you can see that there was a big drop right initially. So you have this inception and then a huge move down, but now we are cleared the last major resistance, which was at 1677. So now at this point, we're really not looking at much price action resistance until 3150. It's quite a ways above. We're only at $18 right now. Whenever the monthly time frame pulls back, just like with our solar names, we will be looking for a higher low, and I love to look left for potential areas of support. And so of course that top stands out to me. These tops stand out to me. These tops stand, and this top of course stands out to me. So if we were to be pull back, then I would be most interested looking around the $15 level to back test these previous tops and just make sure that price can mark up. I would not be surprised if we came back below 1677 unless the bull started making quite a bit more space. Typically you'll see these tops get back tested. So $15 is really what I'm interested in for FAN. Now, there is really no sign of weekly consolidation, of monthly consolidation right now, because in order for that to occur, we need to see that weekly trend change, and the weekly time frame has just really set a really fast higher low off the 12 VMA, beautiful reaction off the 12 VMA to break to new local highs. The TD is very strong, just printed this 1-2 after the 1 to 3 bars of consolidation that one would expect, and I can see that there's another TD9 completion here, so this is very likely some kind of third wave. I have not dug into the Elliott wave, but this is a very impulsive move, and so we will be looking for higher low opportunities. Now on the daily time frame, again, there's just no sign of weekly consolidation beginning either. We need to see that daily lower high and lower low for that to begin, and so the next trade opportunity for a long is really just looking for, again, an hourly higher low. And the last one was really set down here. Now this, I don't love this little rinky dinky one. I would just consider this one the last meaningful hourly higher low here at 1763. So anything above that I would consider to be a higher low. There's not a lot of volume traded on this. You can see it's kind of gappy, so you'll want to be careful. You want to use limit orders, and I wouldn't be surprised if these two tops were to come back and get tested to put in that higher low. So if we're looking for that hourly higher low, we just want to see where the 5 minute is oversold, just like before. And so if I do this fib pull like so, and we'll just assume that we start pulling back right from there, the 5 minute will be oversold right around the 236. Wow, actually pretty nearby. So maybe we'd be interested in scaling down all the way to those previous tops, right? So let's say we start scaling in with 5 minute oversold off the 236 all the way down to the 50, and maybe we can stop out below somewhere if those bases were to get taken out. So something like that, and we'd just be looking for some new highs. Oops, be looking for some new highs very likely. Oops. Typically when I get these kind of retracement plays, I'm usually just looking for the 236 as a target. So the RR is very good, 321 on that. All right, so now it's been 18 minutes. Jason was totally right. He thought I would be way too long. Okay, well, I hope that was helpful, and very open to feedback. You guys let me know, please, what you'd like to see more of, what you'd like to see less of, and I will see you guys soon. Good night, and do good things.